my trading plans for Bitcoin and Ethereum for the upcoming week. As you guys can see, I am already holding this major swing long position on Bitcoin, targeting new all-time highs. I explained this entire setup on my Twitter page for free, in my Discord server for free, and I gave the entire signal for free and publicly as well. But this one is not important. What I want to discuss is my intraday trading plan for the upcoming week on Bitcoin. So what are we looking at is that over here, when I go to the 1 hourly time frame, is that indeed once we met my POI, we started forming a bottom over here and we started pumping towards the upside. Now, structure is definitely looking bullish and I'm expecting higher targets to be met over the upcoming week. The first reason why that is because that on the weekly time frame, what we can see is that last week, yes, we had a red bearish candle, but we wicked into this bullish weekly fair value gap and we closed above it. That is a sign of strength in my opinion. Also, last week, we created this red weekly candle, but we have no wick towards the upside over here. Now we know that red candles always create wicks towards the upside and green candles always should create wicks towards the downside first. Otherwise, the top or bottom of that candle, as we can see over here, the top of that candle will act as a draw on liquidity. So the higher time frame is looking bullish. We bounce from that range low area that I marked out, and when we go to the 1 hourly time frame and we start having a look at the bottoming structure over here, there's a few things that were pretty interesting to me. First off, we saw some beautiful liquidity sweeps across the board. Over here we saw a beautiful liquidity sweep. Why was this such a beautiful and high probability liquidity sweep? Because of this fake break of structure over here towards the upside. What happens with these fake break of structures is that people get trapped into breakout long positions over here on Bitcoin, or they start longing the pullback thinking that this was a valid break of structure, because there's a lot of people that identify wicks as valid break of structures. Now the people that long Bitcoin because of this piece of price action over here, where do we think that they will place their stop loss? They will place their stop loss either beneath the low over here or beneath the low over here, engineering lots of liquidity over here, which means that if we sweep the liquidity, we are looking at a high probability sweep. A liquidity sweep is not as simple as just wicking beneath a certain low or wicking above a certain high. A liquidity sweep is only valid if there's actual liquidity being engineered beneath a certain low or above a certain high, and if only then the price of Bitcoin or any other asset goes and takes out that liquidity. Now over here we saw a beautiful liquidity sweep. Then the second liquidity sweep was a nice one as well in my opinion. And why? So because when we go to the 15-minute time frame over here, what we can see is once again similar price action. Fake break of structure, and over here another fake break of structure as well. These fake break of structures once again engineering liquidity beneath this low and also beneath the low over here. We can see after that first sweep, we already got a bit of a bounce, and then we went for this liquidity right over here as well. After sweeping all of that liquidity, we got a push towards the upside, and that push towards the upside was very interesting to me, because the push towards the upside gave us a valid break of structure right over here. You can also say that the valid break of structure was already identified over here. Why were these valid break of structures? Most of you know this by now, but the highs that we were breaking through were significant highs to break. Why were these highs carrying so much significance? Because the highs that we were breaking through were bringing us to lower lows compared to the lows that brought us to those highs, and therefore these were valid break of structure. So the local trend has been flipped back towards the upside as well. Higher time frame trend on the daily is still towards the upside until we open and close a candle beneath this higher low that brought us to that all-time high. We are in the middle of a local downtrend over here, but we shifted that local daily trend also back towards the upside over here. So the trend is looking bullish on several time frames, and we have managed to reclaim that higher time frame range low as I explained in the beginning of the video. So that means that I start looking for intraday long positions as well on Bitcoin. Now when we start looking at the execution for a potential intraday long position, there's something that we have to take into account over here, guys, because what we can see is that this last push towards the upside What is wrong with this push towards the upside? It occurred over the weekend, and we know that we cannot trust weekend moves. We can see that while getting this move towards the upside, we were seeing a fake break of structure over here and a fake break of structure over here. So we are seeing a weekend pump, putting in fake break of structures. So what are we actually doing? We are engineering lots of liquidity beneath this low and also beneath these equal lows over here. So when I start looking at a potential execution for Bitcoin, I know that the invalidation for my bullish bias is laying beneath this low over here, and my POIs is beneath the low over here where there's liquidity, and also beneath the low over here. So what I'm looking at for Bitcoin intraday wise is to get a bit of a dump, to flush out late longs, and then to reverse from here, or to reverse after taking out that second low over here, those equal lows. While taking out those equal lows, we're going to tap into this demand candle right over here as well. So those equal lows are basically acting as a major inducement for this demand area right over here. Now, will I set limits for Bitcoin? No, because I'm going to await confirmation inside of my POIs before I start engaging with an intraday long position. I will keep on running my swing position. I haven't adjusted any stops on that position as well, but in order to hop into an intraday long position on Bitcoin, I'm going to wait until we take out either this low over here, and I'll be looking for longs over here, or once we take out the equal lows, and I'll be looking for longs over here. Like I said, no limit order set. I will await confirmation inside of my POI before I engage with a long position. Considering the fact that I'm expecting kind of these lows, or maybe hoping for these lows to get taken out, you might be wondering, okay, but Jip, does this mean that you are going to look for short positions over here as well? For now, no. The trend is up, and as long as the trend is up, and the drawn liquidity is up, I won't be looking for shorts. But I do know that as a trader, I'm only willing to play the highest probability setups possible. Now in this case, the highest probability setup will be once we take out those lows. And until we take out those lows, I'm not interested in longs, but it doesn't necessarily mean that I'll be looking for shorts. Also for Ethereum, I'm running a beautiful swing long position, as you guys can see, targeting brand new all-time highs right over here. But also this one is irrelevant, guys. I want to have a look at a potential low time frame intraday long position onto Ethereum, which is following my plan of a potential double higher low play over here, in which we are going to reclaim the higher time frame range low, in which the PO3 accumulation, manipulation and expansion is coming into play soon. So in order to profit once this PO3 is coming into play, we want to have a look at a potential low time frame execution. Now the first thing that I'm noticing when I go onto the daily is that we have a bit of a flat daily candle right over here. I just told you guys at the beginning of the video, bullish candles need to create wicks to the downside. This also means that the weekly candle also has no wick to the downside. The weekly candle of last week had no wick to the upside, which will act as a drawn liquidity. So based off just the weekly candles, I can already kind of figure out a plan over here for Ethereum, because it basically means that I'm only going to be interested in longs if we start forming a wick to the downside, and I have a clear drawn liquidity towards the upside, which is the top of last weekly candle. Right? So that means that if this also aligns with my lower time frame view, we could potentially engage with a long position. Now my lower time frame view on Ethereum is kind of similar compared to my view on Bitcoin. Because also for Ethereum, what we could see is a potential 3 drive towards the downside, right? So liquidity sweep number 1 and liquidity sweep number 2, resulting into a push towards the upside that gave us a valid break of structure right over here, breaking through a significant high. But we can also see that over the weekend, we were getting another push towards the upside over here, leaving behind liquidity beneath the low over here, and also beneath these equal lows right over here. Now we can see that beneath those equal lows, what we can see right there is that we have this strong demand candle, which means that those equal lows are basically acting as a valid inducement right above the demand area for Ethereum. And beneath this demand area is also where we have some more demand lining up right over here for Ethereum as well. So basically for Ethereum, the plan is similar as for Bitcoin. I'm going to await a potential early week dump, which in my opinion would be kind of bullish, to flush out the late longs, and I'll be looking for longs over here, or I'll be looking for longs over here. Now, For Ethereum, I might be willing to set limit orders, but I'm just not sure yet. Because what I usually do is that I await the statistical confluence of the dashboard that I've been using over the past few weeks. So the plan for Ethereum and Bitcoin is simple. I'm going to await a dump to take out the weekend liquidity, and I'll be looking for longs once we take out that weekend liquidity, targeting the high over here, but eventually, guys, I'm majorly bullish on the higher time frame. So my targets will be extended all the way towards new all-time highs. Yes, I know that might sound like a very ambitious plan, but I'll use the higher time frame analysis and I'll use the higher time frame narrative for my take profit targets on Ethereum. So if you want to start looking for longs over here, you can set limits. I'm not saying that you cannot set limits. Put your stop loss beneath the invalidation and then target a lot higher for Ethereum. I'm not saying that this is a bad idea that you cannot play. And I'm not saying that if you play this idea that you cannot make major profits. I just really like to use the weekly and the daily statistical confluence. And if Ethereum is going to dump into my POI, and inside of my POI, price action, liquidity, and statistics are going to give me the confluence to start looking for longs over here, I'll engage with a long over here, invalidation over here, and I'll target brand new all-time highs for Ethereum.